Okay, we are live, my friend.
You always do this to me, mate.
Wait,
You're like, yeah, I'm gonna. So we'll go live. Shall we go live? All right, we're live.
yeah, that's how we do it, mate. You got to react. The market doesn't wait for anyone.
Mate, I don't react.
Huh?
I go to the beat of my own drum.
Does Bitcoin tell you when it's going to go up? No, it's like it's just gone up and you've missed it.
No, you do.
This is part of your training.
That's the whole reason why we're watching you, mate. You tell us, and then we don't have to react. We've got some sort of plan.
Right, where's the music, man?
We march to the beat of our own drum. Who's with me on this?
No,
we've had a comment already. Guess who that's from? If you want to try and have a competition to see who the first comment of the week is, we've already had a few comments. So, yeah, let's just see how you go with that. We'll play a bit of the music. And by the way, happy Monday, everyone. I hope you're doing well. I need some water. So how does it feel? Another year older compared to this time last week when we were playing the same song.
I know, mate. I know. Another year older. Crazy. How time flies. Days fly, weeks fly, months fly.
Crazy. Oh.
You're the same age as me, aren't you? Or older.
Do we look the same age, mate? Come on.
You look.
You don't want to.
So
you don't want to open up that kind of worms, do you?
Yeah, I think you are. I think you're 53.
Higher.
I think you look good for a 65-year-old.
There we go. That's what it's all about. That's what it's all about. So if you're new to the Crypto and FX Traders Club, you're probably thinking, what the hell have I tuned into? And to be fair, you'd be right. The way that this show has started this week. But it can only get better. That's the good news. So Andy's the professional trader, 18 years plus experience. I've somehow found myself as the host of the show, and it tends to work pretty well. A few important people are happy with how we're doing things, so we carry on and we get a little bit bigger. We've now got members in Australia, China, Africa, America, and England. So we're doing something right. And obviously you're a part of that. So there's a lot of people here that may be at work now, or they may be live and they've been here from the very first show. Can you remember the first show we did, mate?
I know, we were amateurs, mate. Not professionals like we are now.
Look, can we stop? I knew this was going to happen. Can we clearly stop with the butt kissing to Mr. Demi?
No, it's not butt kissing, mate.
Gavin,
no,
100% does not.
Hold on a minute. Hold on.
Priscilla,
What if someone had said Andy Demi looks older? Well, you would have just kept silent.
I would have just kept silent.
Yeah, you see, it's not a fair system.
Well, no, but
it's not a dictatorship here, mate.
It feels like it. It feels like it.
Well done, Priscilla.
If Priscilla genuinely thinks that you look younger than me, wow. But do you know what?
Even with a beard, mate.
That's probably what makes you look younger. I'm still trying. I can't even grow a beard. I'm about to start puberty. Priscilla, I'm going to buy you a HD TV, and then maybe when you see the screen without a 720 1080 resolution, you'll be able to see the truth. That's all I'm saying. So anyway, where were we? Yeah, we've had people like the first show that we did was like, if you think this is amateurish, then you should see the first show we did about 6 or 7 months ago. But we have got a great tribe, and you are part of that tribe of what makes it so cool. And believe it or not, we do have some interesting thought-provoking conversations. So we're about to have another one of those. Last week, we talked about some of the biggest psychological and most common psychological mistakes that traders make, and obviously getting a professional opinion from this guy about how to overcome it. But before we go any further, we play a little game to see who can be the first comment of the week. If you haven't registered because you're new, or maybe you haven't clicked the StreamYard link for a while, this will happen. Facebook user, we can't see who you are. We want to see a photo and we want to see your name, please. Like Alvaro, who finished 3rd this week. Good effort, Alvaro. I think Alvaro was on the first show we ever did as well. So maybe you can say what's up, Alvaro, considering what we used to talk like for the first couple of shows. Rob's in the house. Good to have you with us, Rob. Obviously, we have yes, we can see you now, which is awesome. Last week we gave you a little bit of banter. So, and this exactly, I don't ask people's age. It's none of my business. I don't know where your manners are, Mr. Demi. You must still be like drunk on birthday cake or something.
No, we don't. Of course you can ask someone's age.
No, I agree. If you were registered, I would say I could agree with Bob, but we don't know who it is.
You agree with Facebook user.
Exactly that. Exactly that. And that could be multiple ones. So Dan has posted the link. Awesome. And if you're new and you haven't ever commented before, it does us a massive favor because it gives us some juice in the Facebook world of the algorithm and helps us get out to more people, especially in this group. Simon Plummer. That's a new name. I didn't recognize that one before. So thank you very much. So we had Facebook user came second, but you've been disqualified because you don't have a photo and a name, which means it's the people's champion, everybody's favorite champion, Slavomir, prevails again.
Unbelievable.
Awesome.
Make some money off it. He'll lose that spot though.
There should be some sort of optimization of it. So yeah, that is what it is. And yes, no. Facebook user, that last comment was me. Yes, very helpful because we still don't know who you are. Thank you for making my Monday a little bit brighter. It's just got 9 p.m. here on the Gold Coast in Australia, and Andy is coming live from, I was going to say the beautiful city of London, but I'm not really sure that anybody believes that anymore. So just London. Is it?
Yeah. Fair
enough. Okay. I disagree, but there we go. That's what the world's about. So let's crack on with the content because we've got lots to cover. Psychological and most common mistakes with regards to psychology. So one that we didn't get a chance to speak about, we spoke about revenge trading, we spoke about FOMO trading, we spoke about a few different ones in between. And one that was mentioned even on this talk last week was greed. And how that can play into so many areas. And even like when I've done that one thinking, it's hit my target or it hasn't quite hit my target. I don't want to take it. I don't want to take the profits yet. And then obviously down it goes. And then you get the buyer's remorse and all of that. So Mr. Demi, with all your wisdom, now that you're an extra year wiser, please, can you share some of that gold with us on psychological structure as a professional trader and how we, on our way up that totem pole, can obviously put that into some good use, please?
Yeah, greed. So that's a different, it's an emotion again, but it's a different emotion to revenge trading or fear-based trading. And I think it's a different level in a way. But it's one that can definitely affect your trading results. So in a way, like a lot of the time you go through processes of developing into a professional trader. So you might get to a point where you know how to do technical analysis, you know how to make money, you understand the whole process, you've even got a decent psychology, and you think you are very good at what you do now. So you're at that stage, right? So you've overcome the newbie stuff. You understand how markets work. And that's kind of where I got to, where I lost a lot of money after that because of greed, because it wasn't anything to do with my ability, but everything to do with how I was thinking about, growing money without really considering the risks. I was more thinking about how much money I was going to make. And that's greed. So it's being content, right? It's being content with actually just the process, enjoying the process, growing your account, however small it is. And most people are not there, not because they don't know how to do it, but because of their inbuilt psychological flaws that they have, that they're bringing. The market is just showcasing them. So but they're probably there in other areas, right? And I guess I kind of learned it when I learned a lot about trading, not trading. So I learned by hanging around the right people and how they thought about things. So it's strange because, some of the things that I used to do that I'm not going to say I'm perfect at now, but I'm definitely much better at is things like think about your home, and this is nothing to do with trading, but it's everything to do with trading. If you're a hoarder, right, you keep stuff when you don't need it. It's that's kind of partly fear, it's partly greed. You think, I might need it one day, and you haven't used it for 3 years or 4 years, and you think, I might need that wire, right? That was the worst. I've chucked loads of wires out, and obviously when you chuck them out, you end up needing it. But the point is that it's that mentality, right? Or you go to a buffet and you feel like you need to eat everything because you're only there once, right? That kind of mentality. And it's again, greed. So if you're greedy, you're greedy. And when it comes to trading, you're just bringing yourself to the markets, right? So you've made £100, but you'd rather make 1,000. It's like that. But you don't have the capital to make 1,000 regularly. That's the important bit. It's not like I'm saying you couldn't do it, because you might look at examples in your brain to rationalize it and say, well, I've seen people do it with small accounts. Why can't I? Right? And you might. But the problem is it's regularly. Can you take £500, right, and make £1,000 a month regularly? No, not regularly, because it's going to blow up at some point, because you're risking way too much to do that. So it's just so then what happens? You're thinking, well, I know all this great stuff. I've got all this knowledge, but I don't want to sit there working, all day long to make £50 a week or £100 a week, because it's just not worth my time, right? And the thing is, the reality is that probably your peer group would think you're crazy. When I started out, I don't know if I've told you this story, but I think I might have done. But I spent about 12 months with my goal being to make £200 per month. That was all I wanted to make. Why? Because I only had £2,000 in my account. So I just wanted to be able to achieve £200 a month. And I remember when I I was earning, before I did that, I was earning a really good salary for a young man. And I had accommodation paid for. I was sent to Luxembourg. So I was working for a top company, but not anything to do with trading. But I wanted to trade. And I left that job, I left that opportunity, and I spent my time focusing on making just £200 a month. Now, people would think that you're crazy to do that. Why would you do that? And my dad thought I was crazy. And he told me plenty of times. And he literally thought I was insane. And obviously at that time I was living at home. So I was hearing that all the time. And sometimes you start to think, am I being crazy here? What am I doing? But I had a goal, right? All I need to do is okay, can I prove that I can make money with the formula? And then I can scale. I will find a way to get more money. I will knock on every prop house if I need to. I will find more money. If you know how to do it, you'll find more money. And that's the way to do it professionally. Rather than just saying, hey, I've only got £1,000. Let me just dump it all in an account and just trade and blow it up without doing correct risk management. So, and all of this is around greed. It's just you just want a quick, easy way of making money. And unfortunately, it's a question of like, how many times do you want to do that before you learn it's not going to work in the long run? That's really what it comes down to, because you will fail, unfortunately, by doing that, by taking that approach.
Interesting perspective. So Zachariah has now logged into StreamYard, and yeah, we now have Zachariah in the house. We've got Fatty as well. So yes, you are on correct. Perfect. And Dave Wells has commented as well. Patience and percentage, along with slowly wins the race, is a good hook and chain I put in my brain. Exponential growth will happen if you trust your training, strategy, etc., etc. So another one that is quite common, and I hear people talking about, are different types of biases. Now, you probably know all of them. You probably know ones that we haven't even heard of. But there's a couple of the most common ones, like recency bias, for example. Do you want to talk about any of the biases in particular that you've experienced that kind of tend to be more prevalent than others?
I'll be honest, I can't remember the name of these things, but I do know that the most important one is when you are, which is, I think I've spoken about this before, when you're in a trade, you absolutely have a bias towards that direction on your trade. And that's why one of the things that I like to do is, or what I like to do, especially when you're trading a big size account, was to close my trade to remove that bias and then re-enter and pay the broker fees again. I think I've spoken about this in past shows, because you can't help it, right? In a way, like, you just can't help it. Like, you're long something, so you're like, well, you're thinking like, how is this going up? Like, that's it. It's not like, okay, well, this might go up, it might go down. Like, you're not neutral, right? You want it to go up. You want to find the reason, the trend line, the indicator that's telling you it's going up to justify your position. But I think the key thing with that is, like I said, I mean, one of the techniques that I have is, if you've got a position that's quite large, then, or if you can't see it in a neutral way, then I prefer to close it and look at it objectively, and then plan it again and say, okay, let's do this objectively, start again from scratch, nothing on my chart. What would I do right now? And then I can make a good decision. And I think that's probably, for me, one of the most important things that I did in the hedge funds when I was working there. Like, I wasn't afraid to just repay and re-enter. And it's kind of learning to, I've spoken about this briefly before, it's learning to understand your own feelings. So how, like, to really interpret your feelings in the time, like in the zone. And that's why it's so important that we do our best to stay as alert and energy and with maximum amount of energy when you're trading, because when you're tired, it's much harder to be, I guess, open to listening to those emotions and reacting the correct way. Does that make sense, what I'm saying?
Yeah, it does. It does. And obviously, yeah, the cognitive bias that people have because we've done the work, we think it fits a criteria, is really interesting. And if anybody else has got any other psychological common mistakes that you want kind of Andy to break down whilst we're talking about it, send us a message now in the chat, and we can do it if you're quick and you send it in the next 60 seconds or so. But I think it's really interesting. The reason why I bring up the recency bias is because if you're going through a really good purple patch, you end up thinking you're indestructible, and then obviously your risk management kind of goes out of the window, and you start thinking about, oh yeah, I could have, instead of just putting 2% on that trade, if I'd have put 80% on that trade, I could have put a down payment on a house, could have bought myself that fancy sports car. But on the other side of that, the other recency bias is that if we're taking a number of losing trades and we keep losing a little bit, then we may be fearful and scared to actually take the trade, right?
Yeah, that's definitely true. That does happen a lot. I guess, yeah, I think in terms of like how you overcome that, it's not easy. I think like having some accountability does really help. So I found that, especially once I got to a different level, and like I said, there's levels, and when you get to a level where you're like, okay, well, I know how to make money, I know how to analyze the markets, I know how to find a good probability situation, right? So you've now gone from, you're no longer a beginner, like you're in the next phase, right? You're ready, you're almost ready, you're ready to make money, almost ready to make money. And that's the point of like where these things really are going to matter, because they're going to determine what your bottom line is at the end of the day, how well you handle these emotions. So having accountability, having a coach, or working with another trader, like that's on your level. It's important that they're on your level, because the conversation has to match. Like there's no point you having that conversation with a newbie, right? And you're just at a different level. And what's naturally going to happen is the advice from the newbie is going to be the wrong advice, because they're not there. They've never done it before. That's why you have to learn from traders, right? Like that's important, not just educators. So you have to learn from people that have lost money, have made money, who've done lots of different things in the market, experienced different things. So at the very minimum, ideally, you want to have somebody that you're working with that's at a higher level than you, or you work with somebody that's at a similar path to you. So you can at least say, right, okay, I'm accountable. So so a good way to do it if you're on a budget is find somebody who's on that level with you and you get on with, and they review your statements and you review their statements, and they review your journal and you review their journal, like a fair 50-50. So that somebody's going to call you out, right? And you need them. That's the thing. That's why you need them to be on your level, because they're gonna have to call you out. If they don't call you out, then there's no point. They shouldn't be your partner. So if somebody's like, suddenly they should be risking 1%, but because they're super confident, they've put on 5% risk and lost it. That's going to be on the statement, and that's when your partner has to say to you, mate, what's going on, right? Why have you done this? And then you have that conversation, and then you're like, okay, no, I shouldn't do that. Whereas when you're on your own, it's very easy. Nobody knows. You could say something like to yourself, well, it's only $1,000. If I lose it, I lose it. I can, it's not going to change my life, right? So, but the problem with that is that it's not just the money that you lose, it's the habits that you then create. Because the more often you do something, it becomes habitual, and then it's very hard to get out of that. It's like, try stopping some of your habits that you do now. Like, it's not easy, right? It's not easy to change a habit. So the more you do it, the more it becomes a habit, and then it's very hard to break. So if you're doing stuff that you shouldn't be doing, nobody knows about it, and you might think, oh, it's not really doing too much damage. But it is, because you're now building the wrong habits, which is very hard to change. So it doesn't matter what size account you have, that's going to be part of what you do. And you won't know it necessarily, but you end up somehow in the same position every time. And you maybe rationalize it in a different way. Oh, this thing happened to me. I was ill. I was not feeling good. Or, oh, my broker did this to me. You will come up with all sorts of rational reasons. Believe me, I talk from experience. So I know what it's like. So that's why you've got to put things in place to save you from yourself, because we all naturally, as human beings, we don't always do what is best for us.
Some would say, or could say, we're quite an irrational species, hey?
Most definitely, mate. Most definitely.
Go on, mate, go on.
No, we are. Nothing else.
I was going to say, isn't this just fascinating that this is pretty much all about psychology and emotions. It's fascinating. The rest of it is just kind of a byproduct. But this, this is why this is so intense. Like you say, it shines up stuff that you think you're over, and then it comes back around again and bites you on the ass, and you're like, oh crap, you again. I thought I dealt with you. But what a great way to go on a growth of self-discovery, like go on a path of self-discovery, should I say. Like, if you're up for it, what better way is there to kind of learn more about yourself? Maybe you could go and sit on a rock and do like 30 days meditation in silence. And yes, that's a great way of doing it, but is that really very practical in the world that we're in right now? Whereas if you can take the space, like what you're saying, if I'm understanding correctly, if we can take the space to be present between the moments when we're doing a habit and realizing that we're doing it and then stopping it and breaking it, then that's like a real big chink of light that's coming through that dark tunnel, right?
Yeah, definitely. And I think, going back to my point before of having some accountability, it's so fundamental. It's so fundamental, and not at the early stages. Like, don't as a complete newbie, you don't need to worry too much about that. But when you're going to a place where you're like, okay, I want to start to make an income from this now. This is what I want to do. Like, even as alongside my job, I want to make a consistent profit from the markets. That's where it really matters. Like, honestly speaking, if you want to be like, if you want to get super fit in the gym, right? Personal trainers, do they necessarily know more than you? Not really. So there's so much research you can do, so much information you could develop like yourself. So it's nothing to do with information. But for me, I think if you have a personal trainer, their main thing is accountability. I think that's what you really pay for. It's like, hey, they're expecting you to turn up to the gym, so you're like, you can't make an excuse. You've got to turn up. Or you've said that you're going to eat a certain way, and they will know based on your weight or whatever it is. So I guess like that's why I'm saying, like, because we know we break our rules, right? If it was about information, you'd have most people be wealthy and most people would be fit and healthy and energetic. Nobody would smoke because we all know what to do. And those that learn how to trade the markets and they have a systematic way of doing things that's measurable, you have everything you need. But as humans, we'll try and break that and look for ways to break it. It's a strange way of being. It's like one of the weirdest questions that I get, and people listening to this might think that's not weird because you're probably one of those people that will ask that, right?
So you're saying that they're weird, basically.
I'm saying you're weird indirectly, yeah. But one of the weirdest questions I get is, I'll have like students who come up to me and say, look, Andy, I'm doing really well. Like but my system is really basic. This is all I'm doing, but it's working and I'm making money. What other indicators should I add to my system? And I'm like, nothing. Just do what is working. If it's working, make it work. Make money with it. You don't need to add anything else to it right now. Now, you can work on the side on other systems, work on the side on developing yourself, learning new things, learning other markets. Those things are a must for anybody serious about becoming wealthy from trading. You want to be learning as much as you can. But when it comes to you have something that works, your job is just to make that work and make sure that money is going into your bank every month with what you know works, and work on yourself, work on other systems, learn new courses, learn new about different assets, and use that as a way to sort of improve what you do, but make sure what you do know works, make sure you make that work, and make money with what you know works. So that's why I'm saying, like, we naturally, if it's too simple, it can't be correct. It can't work, right? That's how we think. If it was this easy, everybody would be doing it. Isn't that the most common saying that we have? It is that easy. But the problem is that not many people can do just the simple. That's the problem. So not many people can think like that and say, well, if it works, let me just make it work every day. Let me just do the same thing and believe it's going to carry on working. So that's what makes it difficult.
It's really interesting. But I can understand why people would think that, right? Surely you must be able to. It's like if we're a football team and we're in the GM Vauxhall Conference and we win the league, and then eventually we get to the Premier League, we're like, crap, we're playing against better players. Whereas here, it's not like that, is what you're saying, right? Because you're already, if you're trading, you're already in the Champions League. You're already playing in the Premier League. You're already playing the best people. And yes, we are up against people like you in the market. But at the same time, if what you're doing is working, you're not going to have to keep raising your game. But you do have to keep raising your game at the same time. This is where it gets really fascinating for me. All of these little caveats and sub games within the game, right?
Well, think about how champions stay champions, right? So like everybody can be a champion in their own league, whatever league that might be. But how do you stay a champion? Well, you do the fundamentals that you're doing that work, but you always look to optimize what you do. But most of that really is about mindset, like expanding your mind about how much money can be made. That's really valuable work. Like I said earlier, like, yes, increasing your knowledge so that you have more knowledge, but not being desperate for knowledge to fix a problem or to make your strategy better. Learning for the sake of learning, being like just taking it on and seeing what you can do with that extra knowledge at the same time with that better mindset that you're building. And these are the sort of things that, so it's like just, I guess it's like human growth, right? We're just improving as people. Rather than just sitting there watching TV and wasting your time, you are improving. You're becoming a better version of yourself, right? Nobody's going to get better by watching EastEnders, right? Well, I don't think so. So that's a waste of time. But if you're watching something that's going to help you think in a different way, that's absolutely fine. Something that's going to add value to you. For me, that's the fundamental difference. And you know, you become a student of the markets for life. You know, once you get into this is like, for me, this is what I will do forever. It's not a case of like, hey, you know, sometimes people say, oh, when I've made enough money, I can retire, I can do something else. That thought doesn't come into my mind. This is what I'm going to be doing until I can see the screens. That's it for me, because I love it. This is what I love to do. So, you know, and when you think that way, it's no longer, it doesn't matter what happens now, like about the money situation. So yes, of course, the goal is to make money, but money will come when you're not overly desperate for it, thinking about it. And that's why the easiest way to do it is with a job or with another income that you know is reliable, because you have then enough time to build your confidence up, to understand that actually you can make money. And then you can basically migrate and move away from your job.
Very good, Mr. Demi. Very good. So Janine is in the house. Good evening, Janine. Thanks a lot for tuning in and making a comment. So we have a question from Zachariah. Would it be good to step away from trading for a day if you are not too sure about why you're losing?
Yeah, definitely. It's always a good idea to step away, and maybe, yeah, I don't know what works. I mean, you can do different types of work. So one is actually specifically looking at your trades. Hopefully you're journaling your trades and trying to understand them yourself and trying to understand if you did anything wrong, or if you did follow a plan as you should have done. Because we've got to identify, is there a problem with you following your plan? Is it a case that your plan isn't clear? Is your plan not good? So those are the things that we have to identify from a mechanical point of view. But then I like to think there's the other part of it as well, which is like reflecting and thinking about how you feel when you trade, thinking about how you felt when you trade. So that's why if you want to go the extra mile, it's quite a good idea, especially if you're on a bad run, to write down how you're feeling before you start trading on those specific days, because you can just literally just put the date and just put, hey, I'm about to look at the market. It's going to put some trades on. Feeling a bit low on confidence because I've had 5 losers in a row, but I'm going to try and follow my rules and my plan, and hopefully I'm going to have a good day. Whatever, just write something down, and then trade, and then maybe by the end of the day, write down how you feel at the end of the day. And when you review those kind of things, a week later or 2 weeks later, you'll start to spot patterns. You'll start to spot patterns of what you were saying versus other times what you were saying. And it's very eye-opening, to be honest, because we forget very quickly. Like, you can have an argument and then by tomorrow it's gone right in your head. You don't remember how that felt. But if you've written it down, you will almost live through it through your words.
Very good. Very good, my friend. When you were saying about like your diary, I don't know why I just had a flashback to remember when Big Brother started and that guy with the Geordie voice. Dear 59, Andy goes out to the pool. That was my best Geordie accent. Sorry, guys, if you're from Newcastle. So Alvaro's saying it's the consistency that pays off totally. Dave Wells has got a question. Do you think that a specific time frame every day to concentrate on, for example, on an FX pair or two, is essential or advisable?
Well, I think what Alvaro just said there, consistency. So yes, it's better to focus on one way of doing things. So like mostly my time is spent on the hourly and 4-hour charts, the majority of my time. So once I've done my weekly overview, my daily overview, most of that work doesn't really change, not for a long time. Like, you've got your relevant trend lines and your relevant line, support and resistance lines, and whatever else you feel is going to happen, whatever tools that you're using for your higher time frames. So you've got that picture in your head, okay, this is probably what's going to happen. Then the focus is on the hourly and the 4-hour. So, and I think that's a good idea to actually to spend that time on specific time frames, because you get to know the chart really well, and it gives you that consistency that Alvaro is speaking about. Because that's one of the hardest things to do is to stay consistent, to do the same repetitive things every day, without kind of, swaying and moving on to other things and adding extra tools and things.
But just by default, the real trippy part of this is that this, like I said, by default, we're going to lose more times than we win, purely by the nature of this game, because the market's going to, your famous phrase, the market's going to do what it does. It doesn't care about us, our thoughts and our feelings. So the more we try and think our brain, which is only like 3% of our total power, if we think that that's what's going to get us to beat the market, like you say, it's about letting that go and just doing a simple process, whatever it may be, and having faith that that process will show you whether it's right or wrong.
Yeah. I mean, in terms of like, specifically what you just said there before with regards to like, you're going to lose more than you win. Not necessarily you're going to lose more than you win, like, because obviously it depends on how you build your strategy, and like, different strategies will have different win ratios. The most important thing is to kind of appreciate what your strategy is doing, and does it fit to your personality. So that I'm not somebody who wants or can, not can, but it doesn't suit me to be like a 30% winner, like, and 70% losing trader, because 30-70, 20-80, you can still make a lot of money with that kind of strategy, right? So you lose, you win big, right? Like, there's people that love that. So like, they just want to take small loss, and it goes. Okay, you've just made 6% on that trade, and you've lost 1. Like, that doesn't that doesn't resonate with me. I'm more somebody who I'd like to win at least 50%, ideally more like a 60% winning trader. That's kind of because there's enough then to make like a 2-to-1, a 2.5-to-1 reward to risk on average, and that's kind of my perfect setup. So it's important that your strategy meets that, your personality. So it really makes a difference, matching your personality with your strategy.
Perfect. So look, guys, we'd love to carry on talking about this, but we're 2/3 of the way through the show already. I love when we just get into a flow and we have a conversation. Sometimes I sit here and I'm like, what are we going to talk? Like 2 minutes before we go, like, what? How are we going to talk for an hour? And then literally it's like every time we just get into the zone and we start talking. And it may be a little bit shoddy or a bit amateurish at the beginning like it was today, but we always get there and you have faith in us. So thank you very much. Avars sums it up properly. Mr. Demi dropping Dem Gems. Dem Gems, that's what we should call them.
No, you've just added the Dem Gems.
Yeah, because I thought it sounded good, mate. Dem Gems.
Fair enough. So you're saying that what I either wrote isn't enough for you?
I just like to put a little bit of my own. Stop doing to me what I always do to you. Wow, you're on it this week, mate. And that year wiser is catching you up on the IQ scale. So look, we're going to flip things around a little bit. So we're going to do the professional trade setup of the week. But what we're going to do first is we're actually going to look at the news, and we're going to look at the major high impact news events. And then from the news events, we're going to pick a currency pair to look at. So there we go. Look at that, see? Thank you, Mick. We're on the same vibe. Today's Dem Gem. Love it. That's what I was trying to say. So let's get back to business. So we are going to get picture of Hunky Man up. Oops, not that one. That's tomorrow's show. Crypto Like a Pro tomorrow. In case you don't know that we do a crypto show and an FX show. So today is Pips Like a Pro. Tomorrow is Crypto Like a Pro. So with that being said, we have got Pips Like a Pro trade setup of the week with Dem Gem. And first of all, we're going to get the news up. So we're going to review the high impact news and see what's going on this week. And then from that, we would see what's going on in Andy's brain. And then we'll go and look at a currency pair based on the high impact news. So if that sounds good, take it away, Mr. Demi.
I will. Okay, let me just screen share. 1 second, guys. Okay, there we go. All right, let's have a little look. So, looks like a quiet start to the week. So hopefully you can see my screen. So the most important focus really is the high impact, and also just because they're high impact doesn't necessarily mean they will be. But those are the ones that we want to kind of really care about. This covers everything that is scheduled. My preference is Forex Factory. You can use other ones, whatever your preference is. But this is my kind of go-to Forex Factory. So Monday, Tuesday is quiet. There's nothing really major happening. On Wednesday, we do have the Bank of Canada rate statement, which can have an impact. So depending on the kind of sentiment, that can have an impact on the CAD. So we'll kind of look and see that could move this week. And then we have quite a bit of data coming out from the euro and from the dollar. So we have the monetary policy statement. We also have the ECB press conference, which can have an impact on volatility. So these are happening sort of in the afternoon on Thursday, GMT. And CPI. So CPI is a big one. That's going to really have an impact on future interest rates. So basically the consumer price index measures inflation. And we we have here, you can see the previous and then the forecast. So if you have a look here, the previous number was 0.8, the forecast is 0.4. So generally speaking, if you get a number that is, let's say, if you got a number above 0.8, that would be a big move in the dollar upwards. Normally, anything in between 0.4 and 0.8 will just kind of see a lukewarm move, probably up and down. So I wouldn't expect that there's going to be too much movement if it's between the two numbers, the previous number and the forecast. On the flip side, if the number is lower than 0.4, that will be seen as negative for the dollar, and the dollar will have most likely have a drop, a decline. And again, Friday seems to be fairly quiet. So the big days really are going to be Wednesday, Thursday. Not a lot going on this week, but certainly euro against the dollar could get some movement this week. So that one, in terms of volatility from what's scheduled here, we could get some decent moves. We've got Canada here as well. That could have an impact. But I'd say the ones to focus on is probably euro, euro pairs and dollar pairs would probably have the most volatility. So just a little note as well here, because you've got euro news and dollar news on the same sort of time period on Thursday. If you trade euro dollar, if you have kind of conflicting news, it can be quite messy. So you could get like up and down movements. So just kind of bear that in mind, that might happen. So once you've kind of, because even the press conference at the same time as the inflation figure. So you might want to avoid euro dollar trading it around the afternoon on Thursday, because it could be quite volatile up and down, and it's very easy to be stopped out. So with that kind of in mind, we can go and have a look at a currency pair. I'm still happy to have a look if anybody wants to request anything.
With that news there, with that information, is there anything that's jumping out to you if you were just trying to look for ideas to trade?
Well, as I said, I think the dollar pairs would be, that's kind of where I would start. So like looking at the majors, cable would be a good one, because we don't have any sterling news, but we do have dollar news. So I would probably start there, and then we could look at something like the Kiwi or Aussie against the dollar. And then you could also look at something like Euro Yen, Euro Aussie, those kind of pairs, so that you don't have two, like I said, we don't get two currencies that are, releasing news at the same time, and you don't get those kind of whipsaws. If you're kind of going for a longer term, it's not so bad. But if you're going for short term opportunities, you kind of want to avoid that. So
cool. So obviously we've only got time really to do one thoroughly like you normally do that, which is great. One question I do have for you, mate, which I know we've never asked before on the shows that we do. Have you tended, over your 18 years of trading as a professional trader, have you tended to trade any news events? And if so, which one was your favorite one to trade?
Yeah. So I used to trade GDP and retail sales for Australia. So I used to do that sort of 2 a.m, because commodity pairs tend to be, so things like the Aussie and Kiwi and CAD, they tend to be quite clean moves compared to the ones that we get over here, like sterling or euro. So I used to do that, yeah.
Cool.
and it was effective, but then it kind of messed my day up. I haven't done that for quite a while, but I used to just literally do a straddle, set it up before the news, one buy order, one sell order, and then just manage it. But obviously at 2 a.m, I'd then be fully awake having done that. And then I'd, be wanting to sleep and not be able to. Let me just bring in the screen. So I think we'll do cable. Should we do cable? Do you want to do something else?
No, let's do cable. That's a good shout.
Okay. All right, let's do cable. Cable's a popular one anyway. So I know we have done this one before, but let's see what we're doing at the moment. So let me get. I always like to start with a clean slate, especially for these type of things, so that we can just look at things objectively. So I'm just gonna see where the market is reacting, and we'll just kind of see if there's anything here of interest. See, like how you get these, you really can't spot them until these lines are in, right? But can you see how the market has these hidden reaction points? They're everywhere once you've done those lines, right? So we can also say this, and you could even use that as a kind of guide. So if we extend this out, it's worth putting these in on your chart, because if the market does end up going higher, we kind of know where it likes to react. And equally, if we break through here, we know where it likes to react. So let me add in my fibs going up.
So just what you're adding in those fibs, you say, these lines are everywhere and you don't know where these hidden lines are until you see them. How, like, you were the one that created these geometric angles. I know he's too modest to say it. He created geometric angles. No one else is doing this, and he started this. How do you just get to see these? Like, what was going through your mind when you were like, oh, I think I'm onto something here. Maybe I'm not. Was it like a trial and error, or was it just like a jolt of lightning or energy, and you were like, I get it. I see this now.
Yeah, I don't know, to be honest. I think it's just having spent so long on the markets, you just start to see things, spot patterns. I guess you go from like I guess you go from like, we spoke about phases, and you go from a newbie to a point where you might make money, and then you go to a different phase, which is like complete mastery, where you're now developing stuff, like you're thinking in a completely different way. And it just, if I'm honest with you, it just comes natural to me. Like I can just see things. Like and a lot of the time it's just chart time, and I stare at things and it just comes to me, like, and I spot things and then I test them because I'm passionate about improving. So yeah, I that's all I can kind of tell you, really. It's it's somebody doing what they absolutely completely love to do and what they were meant to do for whatever reason. It's not like doing this is life-changing as a standalone thing, but maybe my job has been to impact others, to help others to be able to do this. I don't know.
Cool.
But yeah, so I've put in, this is quite good. I like this. We've got this this line here, which is reactive, and what I quite like here is that we've got this D right here, and basically, for those that don't know, this is basically where we would expect that the market would complete its Fibonacci structure. So hold on, lost my toolbar. There we go. 1 second, guys. Oh my word.
Yeah, so while Andy's getting that up, as he was saying, this is just where this is showing. So this indicator at the click of a button is something that Andy's brain has come up with, and he's designed this as well over the last few years. So this shows us where, because the market moves in waves, it doesn't never move in straight lines, right? Well, I think we all know that. This is showing us where the next wave could be ending. Is that correct, Andy?
Exactly. So what this indicator is telling me here is that we have the start of the wave here, and then this is the sort of the A point to the B point. This is the retracement, and then the market is predicting that the wave is going to complete here, right? Which is actually perfect because that matches really, really nicely with this line here. And remember, we are dealing with a weekly, so there is a good chance that we might get a failure somewhere here. So the market might come to here, and then this here, for me, represents a very nice shorting opportunity. To and then this comes down to the strategy that you have and so on, how much you target. That bit is like down to your own strategy, but there's a high probability that we'll get some movement down, whether it's here or whether it goes lower. We can, that bit doesn't really matter because we can make money by just knowing this fact here. There's a high chance of that happening. So that level comes, so it's around 143.50 roughly as a zone. So let me have a quick look at yeah, and that Fibonacci is the same sort of thing as before. Like I just seeing things, and I just create rules and test them, and then just see what works best.
You are the Rain Man of trading, aren't you?
Rain Man. Right. Let me see. Let's see where. I'll just have a quick look at the levels here. Yeah.
So what's this one that you've just brought up?
So this is our auto resistance line and support lines, and it's basically identified this block here as a major resistance point, which is where we are. And what I like about this is that it's pretty much agreeing with the weekly. So the Fibonacci is roughly here, 143.38 here. The Fibonacci weekly is 143.50. For me, that's basically pretty much the same thing. So we're saying this is a really good zone to be looking to sell this right now. And if we were to break through this, guys, what I love is that, with the way that we trade, that doesn't mean, you might get a stop out if you place an order, but I mean, without going into too deep, what that tells me is a lot about the market. And then we just then switch, right? We become buyers. So we start looking at this big block as a buying block, and we will make more money than even if we did get stopped out and you lose 0.5% or 1%. Once you understand where you are, where the cycle is, it's too much to explain in this short amount of time. But essentially, once you understand it, you can make a lot more money on the upside at that point. So, you're almost, if you do get stopped out, you're paying for information. So that's kind of the way you want to look at it. Let me quickly look at the 4-hour chart and see if there's some kind of setup there around the zone that we're looking at. So I will add in I'm just going to keep this simple, add in my fibs. I want to see where we are, if we're in the D zone or fade zone, or let's have a look. Okay, so we're not in the fade zone at the moment. We're not in the fade zone at the moment. I think, where is that? 143.80, 143.50. 143.50, 143.38 is about there. Yeah, I mean, it could actually spike as far. So there's two things that I would look at here, guys. I would either look for this to complete its cycle up here, which is slightly higher, about 143.70, and then come down and close below. It's important that we close below 143.50, and then I would look to sell it for a move down. Alternatively, we might get this market. See, there's a bit of a support line there. We could get something like, I mean, something like that, where it goes back to this little zone here. And then we go here, and then we short it down. So right now, I wouldn't do anything. So I need it to either be back down to here, and then I'll look for this to bounce higher, or I need it to go up here, and then I'll either try and short some there, and then if it closes nicely, I'll short some more. So that's kind of like the general plan for cable. Nothing that I can do right now. I wouldn't place any orders. I'm going to put my alerts in for when we hit this level and this level, and I'll put an alert here, and then I'll put my notes in, and then I'll come back to it to see where the opportunity is. And really, generally speaking, this is what I do. I do this for across multiple currency pairs, and once it does what I need it to do, then I'm ready with all my notes to take the trade with the correct risk without ever having to think about it. So I've done the analysis once, and then I'll be absolutely ready to take a high probability trade. But right now, we don't have that, so I wouldn't do anything right now. I would just set it up.
Awesome. And that, guys, is how a professional trader's mind works. If you want to find out a bit more about how Andy's got to the stage, from when he was working at the hedge funds or on the trading floors for some of the big banks, we'll post a link below of a webinar that we recorded. It goes into so much detail. There's so much great value content in that. It's for free. You can watch it whenever you want. So we'll post the link in the Facebook group, the Crypto and FX Traders Club. We'll put the link below in the chat section. So that is it for another show, mate. Another Pips Like a Pro down in the books. Is there anything you want to say before we bounce?
No, I think I've done enough talking for the day. But thanks, everybody, for being here. We appreciate you.
We do. Thank you very much for your support, guys. And yeah, we'll be back same time, same place tomorrow for Crypto Like a Pro, talking all things cryptos. But if you're going to be trading FX this week, have a great one. Hope you make lots of pips. And we'll see you this time next week. See you later, guys.
Take care, guys.
Delle genti che passeranno, oh bella ciao, bella ciao, bella ciao, 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 e quelli che passeranno, vi diranno che belle